And to the rest of what's been happening on the local market now. Earlier I spoke to Marcus Padley from Patersons Securities. Well, Marcus Padley, the government's new budget forecasts were pretty well flagged, so presumably not much reaction from the stock market.
No, well, it's all politics, not economics, really, Ticky. They're always a little bit too optimistic and downgrading GDP forecasts a little bit behind the eight ball. And their commitment to a surplus in 2013 is a little bit amusing for everybody politically to see whether they can actually do that in the end. But it has prompted suggestions that a rate cut is now more likely, because in order to hit that surplus, the economy is going to have to be, or policy is going to have to be a little tighter. And there were concerns for public servants, for instance. And if so, maybe they can loosen up on interest rates. And quite a few people are now forecasting a December rate cut.
Now, bank stocks surged yesterday and then they sank this morning, and then they finished up a little better than many other sectors. So what's the view on the financial sector at the moment?
Well, the banks are the best sector to trade. They appear as a sort of low PE, high yield sector, but it's not the case at all. If you look at the National Bank, it's had 10 moves or 10 fluctuations this year. 8 of them have been over 10%, 3 of them over 20%. They're trading stocks, and they're the best stocks to trade for a relief on European risk. And when we had our last rally ahead of the EU, the last EU summit, the market went up 11% in 4 days. The banks went up 19.2% from bottom to top. And the feeling is, with another EU summit coming up on December the 9th, they could do something similar. So this current sort of very short-term reduction in European risk is obviously helping them. They're the obvious sector to play, but I wouldn't say they are safe. They're very volatile these days.
And the retail sector is reasonably firm today, and I see Westfield among the standouts.
Yes, Westfield was up over 3%. It's actually up 12% from its fairly recent lows. And the recent rally has been on the back of that very good performance from the Black Friday and the weekend, Thanksgiving weekend shopping experience in the US, which saw very strong retail sales, and Westfield obviously exposed to that. The rest of the retailers had a great rally ahead of the last interest rate cut, some really quite big rallies in the obvious stocks. And the hope is, I think, with interest rates again possibly going to be cut in December and maybe again in February, that they will rally again because they've lost the recent rally they've had. So that's the interest really in retailers, that we get a rate cut, and obviously that could be just around the corner.
And the competition regulator has again delayed a decision on the takeover of pay TV operator Ozstar by Foxtel. From investor point of view, I guess it was a case of not happy Jan.
Not to start with anyway. The share price of Ozstar fell 8% on concerns that the ACCC might just block the bid. But a late statement from Ozstar said that they welcome the discussions, because it obviously means they are still talking with the ACCC, and that Foxtel have got issues that they want to get over. It is an interesting situation because the bid is worth $1.52 and the current share price is $1.15. So there's a great return if it does go through. And by the end of the day, people are thinking, well, maybe it will.
Marcus Padley, thank you very much for joining Lateline Business.
My pleasure as always, Ticky.